All right, today we're going to dive into a financial blueprint that honestly turns everything on its head. It's a system that rejects the dollar, completely redefines what profit even means, and operates on physical gold and digital law. It's called the sovereign operator model, and it challenges some of our most basic assumptions about wealth. So let's get into it and see how this thing actually works. First things first, to really get why a system like this would even need to exist, we have to look at the pressures building up in the one we all live in right now. The source material we're pulling from paints a pretty stark picture of a global financial system under a whole lot of stress. Okay, this quote really sets the tone, doesn't it? It argues that a future crisis won't be a classic collapse of confidence, panic in the streets. Instead, it'll be a mechanical liquidation event. What does that mean? It means we're not talking about human emotion, we're talking about the system's own plumbing breaking down, forcing massive, automated sell-offs, whether anyone wants them or not. So what's one of these mechanical triggers? Well, according to our sources, a big one is a rule called T+1 settlement. Now, this forces brokers to find the cash for a losing trade in just one day. And if they don't have it, a computer algorithm automatically sells their winning positions, things like gold or silver, to cover the loss. It's a forced liquidation, pure and simple. Now, let's zoom out to the bigger picture, because the two trends you see here are deeply connected. On one side, you've got the U.S. national debt just soaring towards $38 trillion. And on the other, you see the dollar's role as the world's go-to currency shrinking. I mean, when the debt is exploding and global trust is eroding, it's really no surprise that other countries are starting to look for an exit ramp. And this brings us to a crucial point. This is not just some theory on a whiteboard. Nations are actively building alternatives. You've got the BRICS countries, for example, developing their own parallel payment networks and even a new trade unit that's partially backed by gold. It's all designed to get them out from under the dollar. And this is the world that gave birth to the very system we're about to break down. Okay, so let's shift from the problem to the philosophy behind this alternative. It's all built on a very specific and, I gotta say, pretty radical way of thinking about wealth itself. At the absolute core of this entire framework is a really sharp distinction. On one side, you've got currency. Think of the dollar. It's basically a debt note that's literally designed to lose purchasing power over time. But on the other side, you have money. And here, that's defined as a tangible asset, like gold or silver, designed to preserve its value. And this isn't just about words, it's the fundamental belief that drives every single decision in this system. And this brings us to a key concept they call the profit trap. Here's the idea. Selling a real asset like gold for more dollars isn't a win, it's a strategic mistake. Why? Because you've just traded something designed to hold its value for something designed to lose it. The goal here isn't to stack up more currency, it's to accumulate more money. So, how in the world do you do that? Well, this slide shows the system's core strategy perfectly. It's called ratio playing. You completely forget the dollar price. You start with, say, 10 ounces of gold. When the ratio of gold to silver is super high, meaning silver is cheap compared to gold, you trade your gold for a whole lot of silver. Then you just wait. When that ratio falls back down, you trade all that silver back, and you end up with more gold than you started with. You've just been paid in pure metal, not in a currency that's losing its value. Okay, so this all sounds great in theory, right? But who actually puts this philosophy into practice? Well, this brings us to the central player in this entire system, the Lex Node Operator, or LNO for short. First thing to understand, the LNO is not a passive investor, not at all. They are defined as an active fiduciary and a settlement agent. Their job is to literally build and run their own small, private, asset-backed commercial system, and to do it with a really high degree of responsibility. So what does an LNO actually do? Well, there are three core mandates. First, they are the guardian of the physical gold. They have custody. Second, they create all the legal paperwork, the chain of title, that proves exactly who owns that gold. And third, they handle all the transactions in a way that follows the rules. They are, in effect, building and running their very own private bank. So the LNO has these really serious responsibilities. But when do they actually kick in? According to the protocol, it all starts with this number, $2,500. The moment the total value in their system crosses that line, it acts as a fiduciary trigger. That's the signal that turns on all the automated machinery for tokenizing assets, recording ownership, and settling transactions. Okay, so now we know who the LNO is. Let's get into the really cool part, the actual tools they use to do their job. This is where law and technology really start to merge.
The engine that provides all the credibility here is the notary chain. Think of it like a specialized digital ledger, where every single action, taking custody of gold, valuing it, transferring it, is recorded and digitally notarized. This creates a permanent, provable, unchangeable history of everything the operator does. It's all about proof.
Now, you might be thinking this all sounds like it exists in a legal vacuum, but it doesn't. It actually plugs into the real world using something called UCC filings. You can think of the UCC as the official rulebook for business. By making a UCC filing, an L&O basically puts the whole world on notice that a specific pile of gold is being used as collateral for a deal. This makes their private agreements legally enforceable in the public system. Now, this part is absolutely critical for maintaining strict legal and financial discipline. Operators use a four-account structure. It separates out assets for personal use, for business operations, and for their fiduciary trust duties. The whole point is to prevent the commingling of funds and to keep crystal clear legal boundaries for every single transaction. So you're probably wondering, how does this gold-backed system pay its electric bill? Well, it uses a strategy that the source calls seasoning with Caesar. The idea is really simple. Keep your real wealth in real money, gold and silver. But when you absolutely have to interact with the traditional dollar system, you move the smallest amount possible for the shortest time possible. You render unto Caesar just enough currency to get by without putting your entire treasury at risk. All right, let's zoom back out. We've looked at the philosophy, the operator, and the tools. So what is the ultimate vision here? What is this all building towards? What's the end game? This quote from the source material just nails it. The goal isn't just to run a piece of software or a node. The ambition is so much bigger. It's to operate a complete, self-contained, sovereign financial operating system for your own treasury. And this slide really breaks down what that means. You've got a core accounting system just for the gold itself. You have a notarial anchor, which brilliantly uses the power of the Bitcoin network to create an unchangeable public record of every action. And then you have the settlement engine. You put it all together, and it's a private, sovereign financial machine that you control. And so this is where we'll leave it. This entire system is built on this fascinating and frankly disruptive idea that law and computer code are merging to create new financial realities. And it leaves us with one final, and I think crucial question. As this trend continues, who's going to be the one writing the rules for this new economy?